The production of this program is made possible thanks to the support of the following and viewers like you. To invest or to save? That is the question, says Pam McDonald, the Director of Communications and Education with the BC Securities Commission. With interest rates on savings accounts so low, more and more people are looking to invest in stocks, bonds, and other securities, continues McDonald. The challenge for those entering the market is how to navigate a complex investment environment, especially if they're endeavoring to do it themselves. Investment accounts, RRSPs, TFSAs, RESPs, retirement income funds, first home savings accounts, registered disability savings plans are all options available to anyone who looks to increase the value of their financial portfolio, says McDonald. The challenge for new and even seasoned investors is choosing the right investment vehicle. Colin Whelan of Innovative Research says people worry about getting it wrong. After all, it is their money. And he says add in do-it-yourself investing. It makes it scary. He continues, our polls show new investors are worried more than ever. And as a result, investor education can serve as a protective shield, and it helps in achieving better financial outcomes. I invited Pam McDonald and Colin Whelan to join me for a conversation that matters about healthy and successful investing in an increasingly dangerous investment world. Pam, Colin, welcome.
Thank
for
you.
having us.
You know, I think that so much, and particularly in British Columbia, people have been so focused on real estate markets, it's as though investing in the financial markets has taken a back seat. But these days, I believe that attention is turning more and more towards, well, how can I make my money work for myself in an environment that is tightly regulated, but also gives me freedom to buy, sell, move my investments around, and so on. But the question is, how do you do it in a manner that is, well, safe, or at least you can safeguard yourself? Where does that start, Pam?
Well, as you say, the investment markets have become increasingly democratized these days, and so there's more information and more access to them for more people than ever before. But it's not something that we always talk about freely at home, and it's not something that's always taught in schools when you're young. So when you're just starting to think about investing, you really need to go back to the basics and think about, what are my goals in life? If I'm a young person, my goal might be saving for a car. It might be continuing to save for some further education. It might be saving for a home, but as you get older, it's more likely saving for your retirement. So you need to understand your goals, and that will really dictate what your time horizon is. And then you need to think about, how should I invest? Do I have enough knowledge to do this myself? So to do perhaps some DIY investing, and I know Colin can talk more about that. Or do I need an investment advisor? And if you need an investment advisor, there's a process to go through choosing the right one as well. So those are a few things to think about as you're starting out in your investing journey.
So Colin, I know that you do research, like you're polling people about what they're doing and their objectives when it comes to working with investment vehicles. Mm-hmm. What trends do you see emerging right at the moment?
All sorts. I mean, it's a really dynamic space right now. The biggest one that a lot of people are focusing a lot of attention on, and I think rightly so, is this shift. Pam called it a kind of a democratization of access, where more people are choosing to do DIY or self-directed investing. One part of that people don't always think about is that a lot of those folks are actually what we might call hybrid investors or hybrid DIY investors who are actually kind of trying it out both ways. They might be trying to work with a financial advisor. That might even be as simple as, they're going into their bank branch and somebody's helping them to buy mutual funds, or it might be a more kind of traditional sense of working with an advisor, and then also dabbling in some DIY investing on their own. But that's an important group as well that people don't always necessarily think about. Another thing that we see is with some of the trends that we see, is with that shift into self-directed investing. More people every day, every year are buying cryptocurrency or kind of alternative investments. There's even just a shift where more people these days than when we started doing this polling, 10 or so years ago, who are saying that they're buying individual stocks rather than mutual funds, for example. And so, those trends are maybe sort of second order after this sort of shift towards self-directed investing, but all of them, matter, and all of them impact the markets in different ways.
The production of this program is made possible thanks to the support of the following and viewers like you. So where does healthy investing start?
Well, it comes with building that wealth of knowledge that's going to allow you to make really smart, well-informed decisions. So I would say, if you are coming with a clean slate with no information, I think what you want to do is go to a source of really unbiased information. So I'll talk about the BC Securities Commission's investor education website. It's called investorate.org.
And you can say that it's unbiased because it's not there for you to be profiting from.
We're not selling anything. We're not trying to get you to open an account or get a credit card. We just want you to see investing as a way to have a sound financial future. And you're going to, the history shows that the markets, the investment markets are a better place for you to put your money than in the bank. Yes, there might be some dips. We saw one earlier this year in March. But as I say, over the course of time, you will recover from that, and your investments are going to go consistently up over a period of time. But you need to know, what am I comfortable investing in? Is it stocks? Is it bonds? Is it mutual funds? Is it exchange traded funds? So you need to, dig into.
So you have to do a little bit of self-assessment.
Self-assessment. Who am I? What am I comfortable with? It's all those things I said earlier about goals and time horizons, but just really understanding what you're comfortable with and how to make a good decision and do your own research about individual investments. And another important thing, understand how much risk you're willing to take.
So that's an interesting point, though, about do your own research. How do you do that? Like how do I know whether or not even the research that I'm doing has any value? And Colin, I think this comes to your point about hybrid, approach.
Yeah.
Work with an advisor. Yeah, maybe you do some of it on your own, but to me, it sounds like that's an important component in making sure that you're making wise choices.
Well, yeah, one of the things that we see really consistently is that if we ask people where they're looking for information, where they're getting information from, even if you're, a hybrid DIY investor who is, maybe kind of trying to take some risks in your DIY account and, do a little bit of day trading or do something that's a little bit more high risk, often those people, or almost always those people, still say that one of their most important sources of information is their advisor or their bank. Whereas that's just not going to be true if you don't work with an advisor or a bank. So, there's a bit of a double-edged sword there, maybe in that particular group. But, one of the things too that I might just add on to what Pam was saying is, we see really consistently, if we ask people, if we have conversations with people who are sort of starting out, who are younger, who are just looking to get into investing, about, what kind of information are you looking for? Where are the gaps for you? It is really that very basic stuff. They're not kind of coming and saying, oh, how can I, get into these high-risk, complicated strategies? How can I learn more about these obscure products? They're really saying, if I wanted to work with an advisor, I don't really know how to do that, or where to go, or what questions to ask. And that's, I think, one of the reasons why a lot of the times they'll just end up going the route that's really simple. Download an app, start picking and choosing a few stocks. It's a lot easier, and it doesn't necessarily have that big information gap.
Yeah. Okay, but that's almost like throwing darts at a dartboard, isn't it? Yeah.
I mean, one of the things that we worry about at the Securities Commission, at the BC Securities Commission, is based on something that we learned from research that we do with Innovative and Colin, and that's that people are getting information from social media platforms. So, they'll follow somebody who has a lot of followers, and that individual, maybe an influencer, might say, buy this stock. And they might have a disastrous experience. That is not a really solid way to get information and buy something for your portfolio. So we want people to go to trusted sources, go to the company's website, look at their financials, look at their business plan, look who their CEO is, look who's on their board. There are other places that you can go to. Some people go to Yahoo Finance, for example. So there are many trusted ways. Go to your investment advisor. If you have one. But if not, there are other places that you can go to do your research and get good information that will allow you to make an informed decision.
The other thing I might just add to that too is that there is a real opportunity for parents to have conversations with their kids as well, because we see social media is actually, for young people, the second most common place they go for information about finances. The number one is their parents. So that's already true. But it's not necessarily clear always what those conversations look like, how often they're having those conversations, and there are still lots of people who don't necessarily have those conversations, or whose parents might not feel equipped to have those conversations with their kids. So that is a really important source of information, especially for kind of the youngest Canadians as well, on top of social media.
The production of this program is made possible thanks to the support of the following and viewers like you. So one of the things that I can't help but wonder is, okay, I want to do it the do-it-yourself way because it looks like I can save money. But you're telling me that I can go and talk to an advisor as well? Won't they say, well, what am I giving you all this advice for if you're going to go do it yourself? Or is the investment landscape such that there's an accommodation for this?
No, that you would want to develop a relationship with an investment advisor and put your money with them. As Colin says, people are doing some of each these days. But no, if you have an investment advisor and are seeking advice from them, they want to develop a relationship with you. They want to get to know you, and they have responsibilities in that respect as well, to know their client.
Well, so then that brings up an interesting point in the role of protecting an investor. What responsibilities do advisors have, and then how does that then really benefit the investor rather than doing it the do-it-yourself way?
Mm-hmm. They have responsibilities to know their client.
And they have legal responsibilities.
And they have legal responsibilities. So they have to document certain things, like what are your goals, what is your risk tolerance, those kinds of things. And they have to adhere to those, so that if you say, I'm a more conservative investor, I'm getting closer to retirement and I have no interest in risk, and they have to abide by that. And if they don't, if they do something without your permission that is not in line with those goals, investors have recourse.
But they have to be licensed as well, don't they?
They have to be licensed.
It's not like anybody can just say, well, I know what I'm doing, listen to me.
No, they absolutely have to be licensed. And we are the organization that oversees that whole process. We aren't the licensing organization, but we oversee firms and investment advisors.
So where do you start? Like when somebody says, okay, I want to get into this, and no matter what age you're at, like when we were having a previous conversation, you indicated start small. Why? Why start small?
Yeah, well, I think what you want to do is become comfortable with your ability to make these decisions, to be comfortable with investing, to be comfortable with your investment advisor. And once you've developed that expertise, if you will, that knowledge base, then you might want to step into it a little bit further. But it is really all about confidence. And the more your confidence builds, the more knowledge the more knowledge you build, I think the more comfortable you're going to be putting more money into the market, either with an advisor, pardon me, or through a DIY process.
So when I'm asking the question, of course, in my mind, I'm thinking, okay, you start young, but there's a lot of people who may have lived their lives, saved their money, put most of their investment into their home. They've sold their home. They haven't gone into the markets. Are you seeing more and more of like first-time older investors entering the marketplace?
I don't know that we clearly see a trend in that becoming more common, but it is definitely true that people start investing all throughout their life. So whether that's more true now than it was in the past, I couldn't say. But yeah, it's absolutely the case that people can get started at any age, and that can look different for different people, right? And it can mean different things.
Well, I can't help but think that if you haven't invested before and you're sitting on your nest egg, you want to be even more cautious. And starting small does, as you point out, give you a sense that you're moving in the right direction. How do you avoid scams, though? How? You say don't turn to social media for your advice, but it's coming at you in so many different directions. Phone calls, emails, social media posts. How do you protect yourself?
Technology is being used to scam people more and more, as you say, whether it's the phone or whether it's really through the internet. And the best thing you can do is do your own research. Feel that you really understand that investment, and if you have any questions before you dive in, talk to somebody else. Talk to a third party, talk to an investment advisor, but do your own research, because so much is happening to people through AI. And we're a securities regulator. We can go after people if they commit investment fraud, but they have to be in our jurisdiction. This technology that is being used to scam people is coming from offshore. It's coming from countries outside of our jurisdiction. It is offshore organized crime. So the methods that we have of investigating, prosecuting, and sanctioning people don't work if we can't reach those people. So you just really have to be absolutely sure.
I might just add as well, a lot of our research and I think common sense, might show that, there's a lot of people who would say, well, that's not going to happen to me. Right? I can see how other people might fall for that, but I know what I'm doing. That's not going to happen to me. And, the research shows, ours and other research, all over the world has consistently shown that that's simply not true. Anybody can be a victim of investment fraud or other kinds of scams. It's not strongly correlated with your financial literacy or other sorts of, comprehension. Because, the most sophisticated fraudsters know how to use that against you. They know how to make you feel like you're the smartest person in the room and that you're, finding a great deal, and you fall right into all of those psychological tricks that they have. And now with things like AI, like Pam mentioned, it's that much more challenging of an environment to operate in.
The production of this program is made possible thanks to the support of the following and viewers like you. So does the BC Securities Commission give a warning about promoters or companies that have infringed the rules in the past? And if so, then how, what can you do about them to keep them out of the marketplace?
There are things we can do, but we absolutely put out an investment caution list. So if we have information about an individual or a company that we think is suspicious and you should be cautious of, you can go to our website, bcse.bc.ca, and go to the investment caution list and check that. And that's another good way of doing your research. So there are some things that we can do, but these people are offshore, so it's limited. But for example, we can take down websites. We can work with internet service providers, and we can take down websites if we know that investment fraud is being created through a website. So those are the kinds of things that we can do. We can use the investment caution list, but as I say, the normal tools that we have to really go after people and sanction them and get them out of the markets are limited when the fraud is offshore.
So is that a way of saying if you're going to be investing outside of this jurisdiction, be extra careful because there's not much that you can do?
It's if you're investing through something you hear about online, then be very, very careful. That's why having a registered investment advisor is such a good thing. And if you're not going to go that route and use the advice from an experienced person, then do your own research. But it is about the technology.
Pam, if an investor is looking at an opportunity and is unsure about it or has questions about it, could they actually reach out to the BCSC directly?
Yes, they could call our contact center. And we'll try and help them. We don't give advice, but we can try and help them understand if the company is legitimate, for example. We can absolutely do that.
So, not to get people too scared, because the point of this conversation is to say, look at investing as a way of improving the value of your portfolio. And building a good portfolio becomes a really important asset that you can borrow against once you've established it. Mm-hmm. Are you finding that there's a changing understanding about what that role of that portfolio can be, not only just towards retirement, but to work towards so many other aspects of your financial well-being throughout your life?
I think so. I think because younger people are more and more aware of the opportunities that they have through investing. You don't have to buy 100 shares of anything anymore. You can buy one share. That's what I mean about the democratization of the investment markets. And so more and more people are starting to get involved with investing, and that's wonderful because they are going to have that better future, those better outcomes if they do invest in the investment markets. But really do your homework.
It really does come down to that, doesn't it, Colin?
It does, yeah. And I mean, one of the things, you mentioned a few minutes ago that, a lot of DIY investors, one of the motivations is those lower fees, right? But one of the things that we see is that while that is absolutely sort of a segment of DIY investors, it's only one segment of DIY investors, those ones who are kind of focused on buying the lowest fee index funds that they can, and saving money that way and having that money instead go towards their returns. Those investors exist. That's a real clear segment of DIY investors. They tend to be pretty knowledgeable and pretty sophisticated and know what they're doing. But there's more DIY investors who don't actually fit that profile. And one of the things that we often hear when we're talking to those other types of DIY investors is that they don't necessarily tend to think about their investing as a portfolio. They think about it much more in terms of individual investment decisions that they're making. They'll say, oh yeah, I was interested in this stock, I did some research on it, I followed it for a little while, and then I decided to buy it. And that's a stock that I own. It's an investment that I'm making. How does it connect to my other stocks that I own? Do they all work together as a portfolio? It's not even a frame of mind that a lot of the sort of younger DIY investors are necessarily thinking in.
Because they're thinking about making money.
Yeah, absolutely. Yeah. And though, the DIY investors, one of the things that we see, particularly those that are a little bit more active day to day and kind of watching their stocks and watching prices and making decisions, they'll tell you that, secondary to sort of long-term savings, which is important to them, using this as a source of income is a really strong second goal that they have for that investment. And that's quite different than what you hear from other types of investors who are much more focused sort of exclusively on those long-term savings.
Most important thing is gain as much knowledge and understanding as you can about how the market works, what your responsibilities are, and how to protect yourself.
Yeah, and it can be a lot of fun.
A lot of fun.
It
Yes,
can.
it can.
Yeah.
Well, we ran out of time, but the most important thing is that there are resources available to anybody through the Securities Commission. Mm-hmm. Thanks for coming in and sharing these insights.
Thank you.
Thanks for having us.